guys, welcome to my YouTube channel. So today we are going to discuss about volume gaps. So there were a couple of requests from a person asking me to discuss about the volume gaps. So today we are going to cover it to the extent of the knowledge that I have on the volume gaps. So even volume gaps have been a major tool for me to take positions in the markets. So volume gaps are often ignored by a lot of traders. They only focus on order blocks or fair value gaps, but volume gaps are what uh, that drives the market majorly. So it is also a crucial tool if you learn volume gaps in the markets. So one thing keynote that I want to tell is like take an order block, take an FVG or imbalance. So take volume gap. So everything works only when the market is in premium zone or discount zone. So we will call this as PD array, premium discount array. So for example, if you want to sell from this point, you need to see if there is any order block or volume gap or fair value gap, and you need to sell from the higher prices. And if you want to buy, you need to buy from the lower prices. And in this lower or discounted zone, you need to have an order block or fair value gap or volume gap. So these three things make sense only when they are paid with premium and discount zone. It's not like you want to try to buy somewhere here and using these tools. So it works, but the probability is very less. See in the markets, as you have been seeing the continuous downfall in the markets, right, for the past 2 months. So how volume gaps have played the role? See, imagine guys. So if we consider this as a bull rally, there is this clear cut uptrend, right? Now, how volume gaps have been playing important role to push the prices higher. So let's start from uh, okay, let's start from COVID times. Okay, I think this makes sense. Yeah, monthly time frame is crystal clear. So if I go to weekly daily, it might get confused. So what has happened in the COVID time, guys? We were able to see the huge crash, and then market has taken support from this order block. We'll get this support, and then how do we confirm it? Either we confirm it in the same time frame, or we go to the lower time frames to see if there is any shift in the order flow, like I mentioned in the previous video. So here we have seen this order blocker support. We'll change the color. So market has tapped into it, has not closed here. It has swept the liquidity of this low as well. So this is a premium a discounted zone. So market has been rallying. This is the last accumulation zone that has pushed prices higher, right? To literally to this extent. And then market has retraced and then has taken support from this order block, taken out the liquidity of this low, and has formed a wicks. And then what market did? It has generated this fair value gap, buy side fair value. This is the highest probability scenario to go for longs, because all the people who are saying this huge momentum, they are trying to short again, seeing this bar. So now you see it as a buying tool, take support from here, and then you have gone long, and market has created this volume. This could act as a potential support. So where is the next volume gap? Here is the volume. You see the gap between this candle's high and this candle, sorry, this candle's close and this candle's open. This is the gap in the volume. So these are the crucial zones that you need to consider. So market has tapped into it, taken support from it, collected all the pending orders, and it has rallied up to the higher prices. And then what market has done, it has taken the support of this order block, because in uptrend every bear bar acts as a bullish order block. So market has taken support from here and it has rallied, and we don't see any support. Maybe we could consider this as a an order block. Okay, so market has taken support from here and has gone up. It has created this huge volume gap again. Is this in a premium discount zone? No, because you know if you see the last push up, so this is the a place where market has accumulated and has pushed the prices higher. So this whole thing is called a swing low to swing high. This whole thing is called as a discount zone. So if I modify the colors, yeah. So this is a premium discount zone. Anything below 0.5 level is a discount zone. So what market has done, it has not reacted to any of this gap in the market. I mean, it has not reacted to this volume. So market has closed here, and then it has become a resistance to some sort. And this bullish bar has acted as an order block for this bar to form like this. And then we see the rally up here. So and then still this bearish order block has been in the play, because you know once market has closed below this bull bar, it somewhat acts like a bearish order block. So market has clearly taken resistance from here and has come down to further lower prices. And then where is the next volume gap? You see, there is this volume. See, this candles close and this candles open. There is this volume gap. So market has taken literally resistance from here. It has fallen off. You see, guys, and then it has taken out the previous day's low. It has rallied and or disobeying this volume gap because it has been already respected by this candle. Now you see, guys, there are two consecutive bull bars, decent amount of bull bars, and what is there? There is a volume gap. So market has tapped into it, taken some sort of support, and then rallied up. You see, and then there is another volume here. You see, yeah, market has tapped into this volume. I don't think it has tapped into this. Yeah, it did not tap into this volume gap, but that's okay. It didn't react even after tapping also. It didn't react. Market has closed harshly. Now it becomes kind of resistance. So market has tapped into it and it has continued the falling. And there are two consecutive equal lows and market has taken support from this bearish, sorry, bullish order block as well and has rallied. There is this volume gap. Market hasn't come yet. And you see, guys, there are these two candles and there is this volume gap. Market has tapped into it, taken support, and has gone up. So now you see you got a fair idea of where all volume gaps are forming and which volume gaps are making sense, which volume gaps are not making sense. It all depends on your backtesting. It all depends on the context where you are trying to use. You see, even there is this volume gap, market has tapped into it, it has gone up. So not all volume gaps work. What I'm trying to say here is that this is a great tool for someone who want to look for a PD array in the markets. See, this volume gap has been holding the market all the way through, right? So after continuously trading in this volume gap for almost like 1 2 3 4 5 6 7 7 months. So almost for trading, yeah, 1 2 3 4 5 6, yeah, for almost trading like 6 months, market has finally disobeyed this volume gap. And this volume gap has not pushed the prices higher because it did not close above the previous swing high. If it did, if market has closed above this previous swing high, so there would have been some sort of chances for the people to look for the buy trades, bullish trades. So that didn't happen. Now you can see everything that I've shown you has already formed in the hindsight. Now it gets tricky when you want to use it in the live markets because as I told, be it fair value gap or order block or be it imbalance or volume gap, whatever, these tools work only when you pair it with premium and discount zones. Context is very much important for you to trade in these zones. A lot of people miss out on this is liquidity. So liquidity is also very much important for anything to work. See how clearly market has obeyed this volume gap. So market has taken resistance from here and literally has fallen down. It also is a manipulation and all such sorts. Now you see this bullish bar, market has literally taken support from this volume gap. That is how you see bullish move. But there is this volume gap here again, here also. But why market did not respect it? That's where the premium discount zone comes into the array. It's not like every swing high forms and then you find a volume gap, try to buy, and again every swing high forms, you find a volume gap, try to buy again. It's not like that. Market works in multi folds. So you'll never know how to trace the market by keeping one thumb rule. I have been saying this all the time. So you need to figure out how to utilize all these concepts in a way that actually creates an edge for you. So this is a simple video, guys. I don't want to stress too much or go deep. It's not about depth also. So it's very simple concept. It's not very difficult one. But you need to know whether, for example, if you find a volume gap, you need to know whether market is able to obey that volume gap or not. So that we could confirm only by going into the lower time frames as well. Now you see here, this is a discounted volume gap because market has formed a low and has pushed prices to the higher points. So this is clearly a displacement and this bearish bar acts as an order block. Now you see the precision comes when you draw a volume gap like this, right? So how this volume gap has been acting as a crucial support zone for the people who wanna buy. See here, came here again taken support, came here taken support, and then came here taken support. Not one single time it has closed below this volume gap. Now you could see the importance of this, guys. So if you try to add volume gaps into your trading, so this might be another edge for you. So these tools can figure out a precision level for you from where you actually want to go and buy the market or sell the market. So this is the thing, guys. This is all about volume gaps. There is nothing much to even what do I say, stress about this concept. This is a very simple concept and also very powerful concept. You need to pair it along with the order flow, whether the order flow is bullish or order flow is bearish. If the order flow is bearish, look for premium volume gaps. If the order flow is bullish, look for discounted volume gaps like this one. So that's it from my side, guys, for now. So I hope you have learned something. Go back test it. So yeah, that person has asked me to take examples. Okay, futures. So this is a Bitcoin, guys, Bitcoin futures chart. So here you see there are a lot of volume gaps in this chart. So there are a lot of volumes. Now, if you go and backtest it, where do you see volume gap? Here you see a volume gap. This is a crystal clear volume gap. And then again, where do you see volume gap? Here you see volume gap. See, market has taken support from it. It has rallied up. And then what? There is this volume gap. Market did not obey it. So you need to go into the lower time frames to confirm it whether market is trying to obey or not. And there is this volume gap also. Market disobeyed it. And then there is this imbalance. Okay. And then there is this volume gap. See, see the volume gap here, guys. So how market has taken support into this volume gap and has rallied up. So there are volume gaps everywhere. This is the future chart. That's why you are able to see the volume gaps. If you go into the lower time frames, you will see volume gaps there as well. So see here there is a volume gap and market has tapped into it. It has gone up. So there is this volume gap as well. So market did not react to it at all. So I'm not trying to teach you a strategy. This is not a strategy, guys. Don't mistake me for saying these volume gaps are the best things. It's not like that. Volume gaps are also a tool like any other tool, imbalance or support or resistance or whatever it is. Use them according to your own strategy. See, there is this huge volume gap. So market can come down all the way till here, take support, and then rally up to the higher prices. So we only could do what we could do is mark up these important zones and levels and wait for the market to come, retrace, tap into these zones, form some sort of price action that we are looking for, and then if you find an edge in the entry pattern, then go long. That's how you should be. You should always be planning your next trade. It's not like I'll just open the markets, I'll sit in front of the system, I'll just wait and see if there is any good setup. No, it's not like that. You need to be prepared. If the markets opens here, what are the crucial levels? So if these two are crucial levels, you'll wait until the market comes here, forms any sort of price action and sell. The same applies for the buy side also. Otherwise, you will just bang your heads to the walls if you don't have any plan in the markets. If you think that you are going to trade price action, then it's not impossible, but it gets little difficult. So that's it, guys. That's it from my side. If you want to add any point to this volume gaps, or if there is anything that you want to tell me, good things or bad things, or you want to just bash me, it's okay. I'll take anything. Please comment below. So thank you so much, guys. So see you in the next video. Until next time. Bye, guys.